And the Nigerian Stock Exchange has recovered the sum of 70 million from capital market fraud in 2017, or 18 rather. Now, the money has been returned to investors in the market. The Nigerian bourse had signed a memorandum of understanding October 4th, 2013, with the EFCC to tackle market infractions and abuse. Abimbola Ogunbanjo, the chairman of the Nigerian bourse, who made this revelation during the NSE annual general meeting, said the move was part of efforts to bring sanity to the capital market, while eschewing the spate of economic and financial crimes. NSE chairman also noted that the protection of investors was their major priority as well. And to discuss this and activities at the Nigerian Stock Exchange is Temitope Jolaosho from Financial Derivatives. Temitope, good morning. It's good to have you.
Thanks for having me.
All right, so it's the third day of the week. How would you assess the equity market so far?
So for today, the market has been down. We saw that the market gained on Monday and then continued its losing streak yesterday, and then that has persisted for today as well. And we don't see anything significantly changing the market as of today, so we expect that the market will end on a negative note.
All right, you heard about the recovery efforts by the NSE on some stakeholders there. So what do you make of it?
I think it's to improve investors' confidence in the market, and which has been relatively low, and then also to improve also support investor sentiment as well. But it is not enough for those activities. I mean, there have to be some actions. There have to be some material effect before we can see investor sentiments begin to switch. Because if you look at it, foreign investment inflows, 80% is now in money market instruments, and they're playing on the short end of the curve because they don't know what to expect from the macroeconomic in the long term. So they're all playing at the short end of the curve, and then it doesn't favor the equities market.
Indeed. Now, despite the downturn in the capital market recently, which stocks and sectors showed significant growth, and have they also been consistent?
It hasn't been consistent.
Okay.
So the interesting thing is, you saw that earlier this month, you saw that there was a rally in the banking stocks, and then you see that was because the PFs decided to increase their exposure to the banking space. You saw that there was about 60% increase in the exposure to the banking space from to 1 trillion from 639 billion.
Yeah.
So that sort of drove the performance of the banking stocks earlier this month, and then you see that that has sort of reversed. Going forward, you see that, okay, so the market is basically dominated by institutional investors currently, and then you see that retail investors are just playing it safe.
Yeah.
And then you see that, so also we've seen a lot of bargain hunting in the insurance space, so basically because of the recapitalization that is going on in that space, we expect that investors might want to take positions with stocks that they believe have strong fundamentals, and then that target for acquisition. So because if you look at recently in the market, we've seen a lot of activities in the market in terms of acquisitions, and then there've been a lot of premium buying. So they've always paid a premium on those stocks that in those companies that have been acquired. So investors are taking positions in some of these companies.
Indeed, and you're aware of the latest inflation figures so far. There's been a little bit of spike. So how is that impacting the market? I know it's pretty soon, but then again.
Yeah, so ideally, you believe that when inflation starts going up, investors will begin to favor the equities market instead of fixed income market.
Right.
But we don't necessarily see that, because currently, if you look at the monetary policy rate is still above the inflation rate, so that sort of gives an opportunity in that space. But when it comes to the equity space, the equity market has been sort of have a mind of its own, you know. So even when there was a decline in rates, you'd expect that the markets would go up because of the inverse relationship. But we didn't see that happen, because the market is basically not driven by fundamentals. So there is the technical aspect of it, and then there are other factors that are driving the market. Well, this market, so it's not basically about the fundamentals. So in terms of, and then we believe that towards the end of the year, we might see some increase in activities in the market, because portfolio investors might want to start realigning their portfolios. Like I said, the PFAs had to do that recently. So we might have some other institutional investors have to do that as well.
Very good. You mentioned that fundamentals not playing a major role here. So what's the implication of that to the Nigerian market?
So that sort of feeds into investor sentiment as well, because if I look and then I see that because there are a couple of stocks that have strong fundamentals, and then they're relatively undervalued relative to their emerging peers. And then when you look at that, and then ideally, what do you say that, this should be a good buy for me? And then we see that the market is still trending downwards regardless, right. And then you're not making as much as you expect to do.
Very good. So is that going against global best practice? So what do you make of it?
So it will be against global best practice if it is individual influenced, but it is not influenced by individuals. So it's basically reaction to what is going on in the economy. So the market is supposed to be reflective of what is going on in the economy. But when that is not happening, the economic growth is very slow, so it is not reflective of that. And then when you look at the market and you compare it with the U.S. market or other emerging markets as well, even if you bring it down to South Africa, and then you see that the market, Nigerian market, by the time you pick the banking stocks and you pick the telecom and then Dangote Cement, that's basically what the market is. That's why I believe the new rule that the NSE is saying that if you don't have trade up to 100,000, you're not going to affect.
In fact, that was where I was going. I'm sure to the viewers they would like to know. Give us more details on that. It reviewed its rules on this. Only 100,000 units can be traded. So is that restrictive, or what do you make of it?
I don't believe it's restrictive because if you look at recently. And even if I take just last week, the gainers list was dominated by penny stocks. And then by the time you look at the values traded, they were very little. And then by the time you look at the volumes traded, some of them are even less than 100,000. And meanwhile, they're making the gainers list, And then you see the likes of GT, Zenith, and even some other stocks that have large capital base, and then they're not making those lists because they are dominated. Because by the time you take the percentage, not the value now, it's dominated by penny stocks. And then, like I said, most of the stocks are not liquid. So it's because most of them are not liquid. That is why they are making that list. Meanwhile, stocks that are relatively liquid, they don't make that list.
So how does that affect market sentiments in terms of investors' appetite for such stocks?
I believe it should sort of improve investor sentiment because, like I said, most of the stocks are not liquid. Because by the time you look at the deals, some of them have like just 2 or 3, 4 deals, and then there is a spike in their share price. Meanwhile, it's sort of at a disadvantage to liquid stocks. So, but I think that should sort of balance it out now.
I'd like your thoughts on the FX markets. How would you rate performance so far? Still stability, or CBN hovering around there?
Yes, it's still relatively stable, and then I believe the central bank would want to keep supporting the naira, but then there's going to be a lot of pressure on the CBN from the market side because for foreign portfolio investors, like I mentioned earlier, about 81% of FPI is in money market instruments. And as these instruments mature, so it's either of two things. Do they want to stay in the market or are they going to exit? But on the other hand as well, if you look at generally in the global market, rates are declining. So that sort of favors the Nigerian market. So that means the CBN will be under pressure not to want to reduce rates if they want to keep this money in the system and support the naira. And
of course, the capital market is not immune from the effect of the budget, as it were. So how would you, rate in terms of performance, your expectations, as it were?
Okay, so going forward, we don't, for the oil and gas space, we don't expect a significant change or recovery in the earnings results because a lot of them are still, from the last result that was released, most of them had issue of finance costs, which was relatively high, and then we don't expect that changing significantly now. And then for the consumer space, relatively between weak and flat earnings release because even with the spur in economic activities, we don't expect instant impact on those earnings. Yes, and then in the banking space, as well as you might see that there is a lot of regulatory activities in that space, but it doesn't. There's still an attractiveness in the banking space because as much as you have the no side and they have the yes side to them. And so on the yes side, you look at, so for the African Free Trade Agreement now, so you see that some of these banks are beginning to increase presence in African countries. So you see the likes of Axis Bank, you see the likes of GT as well, and then that's because they are going to benefit from the African Trade Agreement. So as much as I believe that it's just basically going to increase efficiency, and then it brings it's an issue of pricing. So the true price would come to light.
Indeed. Now the telecom sector has been a little bit quiet lately. We haven't been hearing much from that side. They came in with so much expectations and uproar. So what do you make of it?
So I believe for the telecom space, because there's a lot of fintech going on, and then the approval of the PSBs as well. Yeah, so I believe that investors that own the stocks are basically just holding. So people are not really trading. So you will notice that they are like one of the most relatively stable stocks on the exchange. If you look at compared to the likes of the banking stocks, the Dangote Cement, they've been the most stable because, like I said, investors are holding onto the stocks. And then because if you look at their earnings result, I mean, everywhere you look around you, you have to use your data. Indeed. You have to use your call. You have to make calls and all of that.
There's always a demand for.
Yeah. So we don't expect that their revenue or their profitability would decline significantly in the meantime. So yes, we believe that that's basically what is happening in that space.
All right. Briefly, your outlook for the rest of the week.
For the rest of the week, we don't expect the markets had to return positively in the week because, like I said, there is no positive sentiment in the market.
All right, Temitope Jolaosho, financial derivatives. Many thanks for your thoughts on those issues. Good to have you.